Well, good morning, good afternoon, depending on which part of the country you're in, and delighted to see you all here as always. For those of you who had a long weekend, hope it was enjoyable, and despite the fact that some of us are in lockdown, but not a biggie really. It's been a beautiful weekend and it's a lovely morning here. Hi, Rachel. G'day, Wayne. Let me know you can hear and see me okay. That'd be fantastic. Yeah, we're all good here, David. Thanks. Really, yeah, we'll have a look at RMD along the way. Fantastic. Thanks, guys. Okay, let's get things kicked off. G'day, John. Okay, so of course, worthwhile, as always, just reinforcing this key message that this is for educational purposes only. Nothing that you see or hear should be taken as direct personal advice to take trading action. You've got to make those decisions for yourself. These are my opinions, not representative of Go Markets. As we work through the charts, just bear that in mind as well, please. All good. Okay, so let's look at what's come across the news. Well, look at the S&P and NASDAQ both hit record highs last night. Again, as US equities continue to respond positively to what has been a very positive start to earnings season, as we discussed on Inner Circle last week. We've got a Tesla reported after the bell as the major player from yesterday's offerings. It really ramps up today, tomorrow, and Thursday. So it's possibly one of the reasons why Asian markets are actually very weak compared to their US counterparts. We started the day quite mixed, but have really not sort of moved well at all. There's definite caution. Part of that might be due to what's happening in India with COVID-19, but there's no other major news coming across the news wires that might influence that. But as I said, it could be cautious, but we'll have a look at what's going on. There's a couple of stocks are of interest, and we'll have a look at that in a moment. The US dollar index has breached a support as precious metals are trading slightly below key levels. And as I've already intimated, sentiment is likely to be dominated by earnings. We've got Japanese interest rates and US consumer confidence being the data highlights. It's an otherwise quiet day, and neither of those are going to really impact much, I suspect, compared to other things coming across the wires. Let's just put a little meat around those bones. Let's just have a quick look at the futures. There we go. There's the futures, and you can see they've actually turned slightly positive. Again, nothing extraordinary, but you can see that the European futures are pretty flat. If we look at the currencies, the US dollar has moved up. That's just possibly in response to some Asian weakness, but no massive movements in the currency markets this morning. But we'll have a look. There's a couple of interesting potential setups. We're seeing gold and silver as a result of that US dollar strength just pull back a little bit, but both are trading under resistance level, as I said, and we've got Brent crude back over 65 again, which is an important key level. Going forward, if we just pop up the economic data, then you will see in a moment. Good morning, Michael. I hope you're well up there. We'll see that there's very little coming across that's of note. We did have durable goods which came in okay. We had some bond auctions which didn't really move markets, and there's the BOJ interest rate decision. The press conference is I think that most likely will move markets, and that's not for a while, till relatively well into the afternoon. In terms of the rest of the week, and before we meet again on Thursday, let's just have a quick flick through the major highlights. But really, it's a relatively quiet day, waiting for next week's big jobs data. We are getting some inflation data coming out of Australia, which will be important for the local currency as well as the markets as a whole. Then we've got the Fed interest rate decision, but it's going to be the policy statement that comes along with that that's going to be the major thing. And then we've got GDP numbers coming out of most of Europe, but Germany and the general European number are going to be the ones that are going to be in the firing line. That's on Friday, so we'll talk a little bit about that on Thursday. If we look at just quickly have a look at what US earnings are coming out, you can sort of see that we're really ramping up. Last week we were at 50s and 60s, but you can see we're ramping up significantly over the next few days. We've got lots of the Dow components. So we've got Google reporting, 3M reporting tomorrow. Usually that day is a doozy when Google reports, so just be aware of that. We've got Facebook, Apple, I think, at the end of the week. So that's all going on today. 3M's before market open. So there's a few big players before market open, and then of course some of the tech stocks afterwards. So that's all going to move markets significantly, as we've already suggested. Let's have a look at some charts. Hey, we'll start with the US 500 daily because this dictates a lot of what's going on. So there's the record highs from yesterday. There's that just positive, but pretty well neutral start to the day today. Same across all. Actually, let's just have a quick look at the Russell before we move away from the major indices. And there's because the Russell has been lagging a little bit, but looks as though it's feeling slightly more confident this morning, and this is because we're approaching a key level that hasn't hit record highs like the other major indices, but this level it's trading at now, just below 2300 is important. So if we do break 2300, then there could be a move up in the first instance to test this high here that we hit in March. So just be aware of that. That's a small cap index for those of you less familiar with the Russell. We were talking about the Japanese index last week. We can see we had this bounce. So from a medium term point of view, it looks still good to trade to the top of this range that it's now in. It's very well supported at 28,471. But you can see that day to day just didn't break that 200 MA, and now this is becoming a resistance on this. So if we do break a 200 MA, then that's something to watch. Okay, so US dollar index starting our tour around the FX markets. You can see we're off our lows today. We did break through this critical 91 level. Looked as though we're going to continue our way down to support around about this 89, 80 level, or even 90 would be probably a more round number that the market would like. But we've just paused in yesterday's trading a little bit despite that equity strength, and you can see we are up today. So not willing to let go of 91 yet, and of course that's impacting on currency markets significantly, as well as precious metals, which we'll just take a quick scan at. So we can see silver just trading beneath that 2640 level reference last week, and gold failed to break 1800, though we did touch it a couple of times intraday last week, but we're looking really to see whether we've got enough momentum to take that up, which of course will be dependent on what happens to USD over the next few days. Bond yields are pretty stable, so that's helping markets a little bit as well, and keeping the US dollar down a bit. We'll look at Euro USD, break above 120.77 last week, which is a key level we identified, but didn't hold it and came back, and is now trading back below that. So we'll leave that one alone. US yen's interesting. We talked last week again about this playing with the 50 EMA, and you can see that that's this line here, almost using that as support. So we've got potentially a bounce trade going on here on the daily chart. if we maybe look at this on the 4 hourly, you can see it in a little more detail. So possibly a mover above that 108.55, 108.60 level could see us meander upwards, but it's not. There's quite a lot of noise around this area here, so there may be better opportunities elsewhere. If we look at GB pound USD, this was an interesting chart this morning because we've got about 100 pips to the upside, 100 pips to the downside in between these two. Let me just move that out of the way. In between these two more established levels on the daily chart. So if we look at an hourly chart, knowing that those are in place, then we've potentially got to move downwards with that sort of weakness in, or rather US dollar strength. But in terms of an opportunity here, we've only maybe got 30 pips to the downside before we hit a shorter term noise, which we tested a couple of days ago. But there is the move potentially down to here. Now, those of you who are at the accumulation session, so about 70 pips in that. This might be the sort of trade where you might consider that. You could sort of enter a small position here and then accumulate if it breaks this 138.40 level that you can see on there. So that's an interesting potential setup in the making. The Aussie dollar US was looking pretty hot to trot on the hourly chart. Put it on a daily chart for a moment just to get context. You can see how this is resistance, and one wonders whether we're going to get a bounce off that back, possibly down to test this. Just put it on a line chart, you'll see there's some support kicking around at this level here at 77.45, so around about 40 pips from where we are now. Just pop it back on a line chart, but that does look quite bearish, certainly down to this level here, but quite noisy again towards the bottom end of that short-term range. So, and again, you don't really want to be forcing trades at this stage. Now, let's just quickly check in on the GB pound Aussie dollar. Now, this, again, let's put it on daily chart for context and get rid of some of these lines just so we can get some clarity. So again, a currency pair that didn't seem to be particularly unhappy above, really badly support, there we go, that's better. Above this 177.56, we had a nice bounce off it, and then a reversal around about this 180.75 that looked as though, and it looks as though it's going to be the case, looked as though it was going to take us down to here. But that weakness in commodity-based currencies we're seeing this morning may be producing a little bit of a bounce on the hourly chart. Certainly that level at 178.26 looks important. A break above that takes us up around about 44 pips to that level there. So that is our FX chart of the day on a short-term chart. And really the only one that seems to be, that we had a look at this morning, that seems to be giving us a reasonable upside, even in the short term. Now, there may be more direction going on after today, and we get those additional earnings coming across the wires before US market opened tonight. But it may take until that point until we get some sentiment changing moves on the 4 hourly or daily charts potentially. Just watch the yen after that policy statement as well later on this afternoon. Okay, so let's quickly just check in on the GB pound Kiwi. Not a dissimilar picture to the GB pound Aussie. There's the daily. Could be a move down here if we break this level of around about 80 pips. So again, if you don't like the Aussie, the Kiwi could be one to also have a look at. If we pop it on the hourly chart, it doesn't look as though it's bearish. Looks as though it's actually retracing back upwards, similar to the Aussie. So that's why we chose the Aussie. There's slightly more upside in that than there is in the GB pound Kiwi. Okay, let's look at the ASX and see what's cooking. Okay, so you can see we're down a little shy of 0.5%, but this really hasn't moved. This really hasn't moved at all over the last hour or so. Been trading towards the bottom end of the day, and if we do bounce off this because of those US futures, we've got plenty of space to move higher. If we look at our advances versus decliners, really strong decliners, not almost a 3-to-1, and it's the resources that are in the best place with this. So we are, that's what we're sort of looking at. So if we've moved down, ANZ have actually moved positive. That was one of our longer term picks from our session last week. But generally speaking, the banks have been weaker today. You can see CBA down 0.5%, but if we look at BHP up 0.6%, Bingo, Tabcorp all had good, sort of corporate info come out. I think Bingo will take over from memory. Galaxy, we'll have a look at Galaxy. That was one of our charts of the week. Linus still looks miserable. Macquarie, again, another chart of the week from a couple of weeks ago, continue to be in positive territory. But as I said, it's the resource stocks that are looking good. If we look at there's Oz Minerals up 0.4%. Healthcare looking a little weaker today. Rio were higher as well in early trading, and those business stocks that have been our favorites for a while, like Zip and Xero and Afterpay, are all struggling today. So and energy is also up a little bit. So let's just put some put some charts up here, and let's have a look at some that we've looked at. Let's start with RMD. Gigi, you mentioned these actually holding on okay. So this was our chart of the week, one of our charts of the week from last week. Let me just take that off. And we talked about potentially a move above this 2703. Given a little space to that, we could have been in on that. It's actually held up okay today. So although we are down a little bit, we noticed that it did duck below that line at 2703, but looks as though it's happy for now to hold on to it. So still remains a potential potentially interesting on the long side if we break this 2720 on close. So that's where I would put RMD at the minute. On the 15-minute chart, the candle that broke 27 was almost a doji. You're on the 15-minute chart. Yeah, we got a big move at the end of the session yesterday. That's an interesting candle. Yeah, so that was possibly some fairly major repositioning going on. But that's very unusual to see that right at. I mean, obviously, there's always increased volume at the end of the day. But if we look at where our RMDs come from, maybe people sort of saw this start to pull back a little bit and then took some profit. But that's pretty brutal for the last 15 minutes for sure. Now, Seeker, another one we looked at last week. We said we want a break of 31.70. We didn't quite get that as a close price, although it's still playing with it. So just keep that one on your radar, perhaps. It's one we've played with before on this run up here. and we took profit at that point there before it retraced. So it looks as though it's about to have another pop at that, but we are down today. Most of the business type of stocks are down a little bit. Likewise with Sonic, again, we sort of pointed this out last week as a potential breakout going on. We did get a higher, so there's that 36.60, which was the high of about 3 weeks ago. We did test that and indeed closed at that last week. But you can see this week we've been fairly flat. But again, we're not going anywhere. It looks as though there's moves rejected to the downside in the short term. So Sonic's not done by any stretch of the imagination. Iluka were one that caught our eye. We've been banging on about 750 on Iluka for quite some time, simply because of the proximity of this 200 moving average. If we look at a longer term chart, you can see there's a massive gap to fill here. We've filled about half of it. There's the 200 moving average, which do appear to be challenging now. That 750 level looks absolutely critical for this stock. Let's put it on 70. There we go. Well, let's bring it back up, and you can see how we have only had one close above that, which was quite a bearish sort of candle mid-February, but we've been playing with this level for quite some time, made our way back up to it after this retracement here down to $7. So that's looking like it could be on a radar of interest. Qantas going back down to test that 200 MA, didn't like being over $5 and is trading towards the lows of the session, so looks as though that 200 MA is quite important. We need some good news out, but obviously a reduction in international travel into Australia, in WA, while debates between state governments and Scott Morrison on what the best way of quarantining actually is when people come back into the country is not good news for the Qantases of this world, who are already under a lot of pressure. Macquarie we mentioned. Now, if we close where we are now, this is the third day in a row we've closed almost smack bang on this 158.32. So outperforming the rest of the banks at this stage, with the exception potentially, we're just checking on ANZ. As we said, this was our one of our long-term picks. Let's put that on it. But you can see we suggested this isn't quite back up at that level, but it's got to break that 29 for it to have a change in long-term sentiment. It is starting to look a little bit like an ascending triangle with these higher lows there. We'll look at Oz Minerals. We're doing okay today, but have dropped from our highs. So it was looking good in the material space, but now not so much so. But BHP are probably the pick of the bunch in terms of price action today. So we're about halfway, though we opened at our high of the session. We have let some of that go, but that break that we've talked about before of $47 looks as though it's still intact. And so that's a really nice support that we've got in place there. And so it could be, with metals prices continuing to rise, could be that we're shaping up for a retest of $50 on BHP going forward. Suncorp. Suncorp, we don't really like this as a chart. It's not showing any signs of any clear direction anyway. Better opportunities elsewhere, so that's what I would suggest with that. But feel free to offer others. LYC, really trying to find some evidence that we're actually okay at around about this 545 level. We had a couple of closes below last week, but managed to work our way back up to it. Be interesting to see if we get a bounce off this, but this has dropped significantly. Galaxy, which again was one of our picks from a couple of weeks ago, continues to move higher, though has given up all its gains today after another strong day yesterday. So in terms of our share CFD chart of the day in Australia, we find it difficult to look past Iluka. If it closes above that 750 level, some work to do still, so it may not be one that might happen for a couple of days yet, but that looks like a potential change in sentiment in the pipeline. And we still actually like RMD as well, from where it is now. If we quickly look across the US, obviously we're somewhat, just one other to have a look at is BSL. Really strong day today, but you can see we've given up our low. See where that closes, because that's interesting. That came in on the back of some really good numbers, which suggested that the company was in good nick both here and in the US. So just that's not a compelling candle in any way, shape, or form, but just see where that sort of ends up. In the US, obviously, we're looking at stocks that have reported. So with many still to report, which is sort of difficult to find at this stage. So if we look at the banks, quickly look where Goldman Sachs are. Really, this is a typical, I put this up because it's a typical bank stock, lots of choppiness going on, really a lack of direction going on. So we like a continuation of the up move for Freeport-McMoRan. They're a resource stock, probably one of the biggest in the US. So FCX is the ticker code. You can see why we're like these. There's they reported good earnings. They had a breakthrough $38 and a continuation of that. Last night they sort of closed towards the back end of the session, but most of that action was in the early part of the day, as you see there, but managed to hold that and subsequently move a few cents higher as well. So plenty of upside we see in Freeport. So that is our US share CFD chart of the day to have a look at. Now, please feel free to offer any charts you want me to have a look at for you. There's a couple coming across. I'm just checking back. Yeah, quickly look and see what's happening with that GB pound Aussie. It's flatlined a little bit around that 178.26. So it doesn't look as though it's moving for right now, which is not surprising since we're quite a way through the Asian session. It may be when the European markets open that we get some movement on that. Euro yen. Let's just pop on the 30-minute chart for a bit more detail. So we've got essentially a false breakout on the euro yen. You can see this, we've had decrease in volume going on really, associated with this. That might have been a candle to get in on, but for the fact that it's decreased volume. The problem with this candle, of course, is that it's only halfway up. And then, of course, we've dropped back down to that level at 130.73. But that 130.82 level could be interesting. So if we look at a break potentially of that pivot high, let's just take it out a little bit to get context. So we see why this level is important and why there's possibly a reluctance to break through it. In terms of, we did get a closing, a break of our, so this move in Asia is actually a breakout on the daily chart, but we want to see a move over that high there. You can see we did test this level about a week ago. So if you're quite cautious about this, you may look at that level there, 130.88, which isn't only 15 or 16 pips away. But a break of that would certainly precipitate some more buying from a technical point of view. And so that could be an interesting alternative to look at the GB as opposed to the GB pound Aussie. Again, watch the market movement after that Japanese interest rate policy decision statement. See how the market digests that. NST, yeah, sure, David. I know that's one of your favorites. So we'll drag NST on. Right, whichever way you slice it, this is looking as though it's lost momentum. It was looking pretty good when it broke through this level here. Looked very bullish there, but it's probably topped out now. You can see the MACD, or we've got the SMACD on this, which changes color when the signal line goes above rather than having the signal line there. You can see that's turned pink, which means that momentum in the trade is now in convergence rather than divergence. You can see those moving averages getting closer together. As a potential long opportunity, I guess, you've got now a nice line in the sand around about that 1150 level. But just be aware if we look at the lows from last week, again, if we see a breakthrough then, particularly if we see a breakthrough that 1050 level, we could see a lot more selling come along. Michael, I don't think I did. I will have a look. I'll have a look in spam as well, just to make sure they haven't been thrown in there. New farm. Still looking interesting. I know this was one that we had a look at maybe 2 or 3 weeks ago after a break of this level here, but really hasn't done much since then. Again, maybe 540s a level to be interested in. Kiwi Swiss franc, there's an interesting pair we don't look at very often, but let's have a look at that. That's an interesting chart on the daily, as we've got a clear line in the sand there at 66.14. The only issue with this, as is often the case with Swiss franc trades, is that it's very, very noisy often, and so you're limited upside to around about possibly 35 pips there. So if you're the sort of trader that trades short term, looking for a small return with a bigger position, then maybe worth having a look at. But this noise here doesn't fill me full of happiness at all. From a technical point of view, you're going to hit some pretty significant noise potentially around about 66.35. No worries, David. US China. Let's start with the daily chart. Looking to find a bottom around about this that 648.15 level was important. So we need this positive day to be translated into some follow through for that. Bit early perhaps to get into this, despite that positive day. We'd like to see it engulf this candle here. So it may be tomorrow before it gets there. And obviously there's quite a lot of noise again on the daily chart around this level here at 649. So in terms of potential upside in this, around about 100 pips. Let's just quickly look at an hourly chart. Nice move today, nice move this morning on that potential bounce, but could be profit taken from this. So see you, Chris. You're always welcome, mate. So that's, yeah, not one I would be looking at today from a technical point of view. Just a little bit. We need some more evidence that there's a bounce there, unless it drops further, in which case it's back on the agenda. GB pound, Canadian dollar. Looking on the hourly chart, there's a key level at 172.13. What does that look like in terms of context, where you can see how important that level is? Really, you'd want it to see break 171.54, so around about 60 pips in this from where it is now to that level. Could go down and test that, but again, you'd much rather, from a sentiment point of view, it looks stronger if we get a breakthrough that 117.61 level, or there's a bounce off that. This 200 MA that it broke through here is important, but it's done this a couple of times recently, towards the back end of March and a couple of weeks ago. So markets don't seem to be using that as an important level, apart from the fact that it's trading around it. Okay, guys, well, that I think has answered all your charts you wanted me to have a look at. So just a couple of things to let you know about. We've got obviously we've got another session on Thursday, and we've got 5 telltale signs you're becoming an advanced trader as our inner circle session tomorrow. That's one to make sure you get on board with. And we'll just do a quick last check of the ASX. Let's see if we're recovering in any way, shape or form. And we're on the up a little bit. So maybe that we've hit our bottom of the day, and we're getting some response to those US futures. Not breaking any records, but it wouldn't surprise me to see us sort of back up towards, we look as though we're quite happy to stay above 7,000 for now at least. And we'll just check quickly on the futures. And you can see they're pretty static compared to where they were. We've perhaps seen the European futures looking a little bit less compelling than they were earlier. But that's where we're at. Okay, guys, we'll take care of yourselves. We'll see you Thursday, if not tomorrow evening. Trade safe, and we'll catch you very soon. Bye-bye for now.